Good afternoon and welcome to the FX Daily Roundup. I'm filling in for Blake. If you watched the Face webinar this morning, he advised that he was having issues with the internet, and he's still having those issues. So I'm just going to cover him because he has limited internet access, so it would be very difficult for him to go in and step in. But we have seen the euro dollar going in pair back, actually into some pretty good support that we talked about in the chat room. Our bias chart was a little bit higher, but we talked if we could get into this 1043 area here, and we dipped just below that. You can see that we've rebounded a little over 25 pips off of the lows here on the euro. Seeing the dollar index just pair back a bit, but let's go and move into the euro quickly. So looking at the analysis, we were talking about how we had rebounded on Friday, but then we were starting out the week right here on the perch of this broken trend line as well as the 1105 area. If we can get close above this area, then actually two consecutive closes, we can stymie the bears a bit, but it would take a daily close over 1170 to negate this head and shoulders move, but we shall go in and see how that goes and populates. Obviously, the big moves today are going to be in the equity markets that we've seen here. Bear with me. Here with the SPOOs, we've actually just come right up here, just shy of the VWAP. I'm going to give you a quick look there. And we've just started to turn lower just here. We actually broke lower. And as we came off these highs here, we're looking for the market to hold right there at 32.48 and then maybe be able to rebound. But then the news came out, further, coronavirus news, about second person-to-person transmission. And what really knocked it on its rear end was the CDC. I think it was CDC was one that said they're going to treat it as if it was an outright pandemic. And really through, right when we were holding on at that 32.48, they came apart. Now they did hold above 32.42, and we've since started to turn around. And once we got past 48, we started to move higher and thought we might make a move up here to, you can see right here on this VWAP number right here. But we're kind of edging back. We'll see how the market holds around 32.48, which is the area that we broke from to move even higher and challenged. Thought we might be able to make it right up there. As I said, you can see right up there at the VWAP. We just about did. I thought we might just trigger just above it. We're kind of rolling over a little bit. And the test right now is going to be that 32.48 on the downside. It's actually very nice move off of those lows, but it's been all over the place because of all the different headlines. And subsequently, we've even seen some moves here in the crude oil market as we dip below $50. We talked in the chat room, there's two levels that we were looking at actually, is 49.96 and 49.48. They did dip down to 49.96. I think got down to about 92 or something. I know DK Trader in the chat room, he picked it up there and just rolled out of it and actually came into a pretty good area because we're actually coming into some resistance. Actually, you call it resistance, or essentially a key level here. You can see it here at 50.42. You can see where the market paired down. We had a little bit of a battle there, and then we broke lower. You can see some pretty good volume too. You can see right in here. That's why this level is so important. The volume that came in here, and then as we broke a little below, we came back up here to visit. You can see here. And then before we broke lower, and you can see right there, we're just stymied right here at 50.42, kind of holding our own. But then that's again as the S&Ps are starting to back off a little bit, so a little bit of a struggle here. But the market is very oversold. Those are the two, to me, the two key markets at the time. Bear with me, move this out of the way. But we'll go and take a look at some of the other pairs. One that is very, very interesting is going to be cable. We actually finally got on, the old thing, the third time's a charm. Well, on a weekly, we finally got above 30.80, and it looks like they've done the bulls again. We more than 2 weeks ago, which have been the third week back, including this week, we come up to 30.80. We were just above it. Looked like we were going to hold it, and the market sold off on Friday. Then the prior Friday, not this last Friday, but the prior Friday before that, we were actually at 31.66 and everything looked just, hunky-dory. And we had an economic report come out at 3:30 Central Standard Time in the morning. And then from there, we just started selling off. And so I thought, there's no way these bulls are going to want to come back. Sure enough, they came back. I guess they couldn't get enough of it. So we push up, and it looks like we're in pretty good shape. We close out the week well above 30.80, and I'll be doggone if not only did we give up 31, we gave up 30.80. Now we've given up 30 cents here, or 130, I should say. We're back now to the pivot, which is 29.80. Or just about there. So I would look for some little bit of short covering, but boy, the bulls have got to be disgusted. They've been once again flim-flammed on this one, and it finally broke above on the weekly level, and I'll be doggone if we haven't given it all of it back. And speaking of a market that had been not really moving that much, was here on the dollar CAD, and we finally got a little bit of a big movement here. We have been moving higher, but what we had referred to as incremental moves here. You can see even when we had this, bullish engulfing line, the next day we just rally up just a little bit and think, okay, what's going on here? On Friday, we did rally, but we kind of come off and think, boy, when is this thing going to explode? Well, here was our resistance today at 32.69, and boy, we did go on and finally made a good concerted move here, and we've done just that. And boy, if we hold these levels, it certainly looks very well. What we're thinking before is if we got here, we're going to make an event. When we broke here, we thought we'd get to 33 cents. Well, it took us forever, not forever, but it took a little while. So really the door's open for us to potentially challenge up here at 33.82. We shall see, but obviously a pretty good mover today. Also looking here with the dollar yen. Well, we'd come off on Friday, and one of the things that we looked at was that how the market had stayed basically the week below the pivot of 927, which really opened the door for us to move lower, and move lower we did as we came in towards the end of the week. I thought that we might extend that coming into today, but they haven't. So we're pushing back up a little bit. I'd have to check with we have as far as resistance. Bear with me. There we go, 886. 886 is our resistance here. So we're kind of holding steady here today. And, one of the things that has surprised me a bit here is how well equities are holding up overall. And something you want to go and keep an eye on. We could, my thinking is we might even see this market attempt to hold off. And they've really held back. They thought they might open them really weak as we came into the equity open this morning, and we've actually held this. We're looking here at the NQ, but let's take a look here with the SPOOs. We've actually held out okay, and I think be careful on this one. I wouldn't be fading it, although I did come in and step in earlier in the session and faded it in the 32.60 area here, but I'd be careful. My thinking is this thing is holding up very well. Actually, I thought on the pullback, as I told you, I thought we were going to hold up at 32.48 and then go back higher. And then, like I said, they broke them when they had the CDC said they're going to view this thing as a pandemic, and then we broke beyond that. But we held up, and we've gotten back above 32.50, kind of holding here. Let's see if we can hold this 32.58-ish area. 32.48 area here, but holding up pretty well. Holding up, pretty well overall. We'll see how we can defend 32.48, but I'd be careful with this because you have got to think also there might be people that are probably short that were thinking they were going to get paid on the open, really get paid, or if they got short in the Asian session, said, oh, okay, I'm going to hang on, and they didn't, and maybe they're saying, you know what, I'm still going to hang on. I think this thing is going to roll over and just go south, and if it doesn't, that might fuel some, further short covering, so we might find ourselves closing, throwing out there something arbitrarily, but just something like 32.62 or something. So be careful at this juncture. Probably have a lot of shorts that need to go in and cover, and probably looking their chops, thinking we're going to see a big fall going into the close. And not saying that couldn't happen, but if it doesn't, we're going to have some fodder for short covering, fodder for the bulls, because they're going to have some shorts that are going to need to go in and cover. Looking over across the bay, I should say, we're going to take a look at the Aussie. The Aussie's in a world of hurt. We're actually going to have to take a look at this on a weekly chart. Here was the analysis. The Aussie sustained economic issues and natural disasters, i.e. bushfires, coupled as a proxy to China, has opened the pair to a targeted move to 65.28 that may well push to 63.03. Pressure will remain with the RBA meeting this week. Resistance to 67.25, followed by 67.88. Well, probably about 3 weeks ago, 4 weeks ago, there was a 50 or 60% chance they're going to cut. I think it's down to 10%. Maybe they picked it up now, but my thinking is the pressure is just going to remain on this thing for a multitude of reasons. But you can see where we're coming up with the 65.28. You can see right there. And potentially, I think that's where they're going to go to, 65.28. Think for the immediate support resistance, we have 66.67 on the downside. We're about 20 pips above that. And on the upside, 67.21. But we're targeting a move down here to 65.28 before it's all said and done. And we're looking at a weekly chart, so you can see what we're coming up with on that. Let's go and move it back into the daily. Somebody got their, it's all messed up. Here we go. Nope. Trying to switch it back to the daily. I can always throw another one up here, but let me go back and do that. There we go. There. Let's go move this all the way. And let's go and take a look here at the cross rates. Well, we're looking here. What a difference this has been. Well, actually, I was going to look at the Kiwi yen, but let's go and look at the sterling versus the odd. Holy smokes, what a turnaround we've seen here. This market had actually broken above 84.83, and it looks like it was well on its way. I mean, you can see here, we had, on a previous run when sterling was really lighting itself up, we'd actually come up here, and once we challenged it, we had not only had almost like a tweezer top, but we had a gravestone doji, and from there the market sold down. But we came back here really coupled with not only some sterling strength, but really the Aussie weakness. And boy, did we take off. We got above 90.43, man. It looks like blue skies ahead. And now with the sterling weakness, we have really turned around and given this thing right back. Come off quite a bit. Support's going to come in right here. You can see here in that technical level is going to be 93.78 for support here that we're looking. I mean, it's gone and blown by, what we were looking for, when we were in the European session. But as I said, the sterling pairs began to lose and just cascaded further into further losing. If they're going to turn a phrase or something, but you can see it's just been weak. Look at the guppy here, the sterling versus the yen. I mean, you can just see now that does apply. You can see cascading lower. Boy, did that thing cascade lower. And although the yen versus the dollar has been relatively quiet, but you can see we have really come off here. We've got some good, strong support coming in right here. You can see that. It's going to be 40.92. We're not too far away, about 30 pips. We've actually already gone down here. It looks like, what was it, 41.06. So 40.92 is what we're looking lower here. And let's go and take a look at the Kiwi versus the yen. Same here with some weakness. Although we've taken out the lows here, we're actually trying to hold. And now it's just actually, I think it made it just right to the 50%, which is the 69.93. It's the move from 66.30 all the way to 73.55. And boy, this thing was on an absolute rocket ship. And look at this. The 3-week period was just nothing short of amazing. Boy, you wish your daddy hadn't met your mama if you were short with this thing. It just kept going and going and going. Got a pair back, tried to challenge it. Weren't able to go and take out this close. You can see here, that's where they ran into resistance. And we turned low, and really, as with the whole, China issues, it just one thing fed upon another, even though the Kiwi New Zealand economy has done, very well. It was just too much to go on and take. And boy, did we have come off quite a bit. It's still not, if we take out this level here, it'll be, we'll have turned it straight out bearish. It's lost its bullish mantle, but it's still holding above here. You can't say it's bearish yet until we get a close below 69.74 and be 2 consecutive closes below 69.74. Lastly, we're going to take a look here with the Aussie versus the yen. There we go. We've got it right here on the 2-hour chart, but we're looking at here on the daily, get a little bit better, wider pick on this. We are seeing the crude oil right now, 50.49, so it's kind of holding its own there. We've gone and dropped and broken this trend line, and we broke below the key 74.02, and that just continued that move lower throughout this last week. We're actually trying to find some support here at the 61%, which is 72.46, and we've got a little bit of volume coming in right around that area here at 72.30, 72.46. We should be able to see the market stabilize here at this point, maybe even move a little bit higher. We shall see. But that's what we have here. Let's go on and put this back here, roll back into the majors. As I said, the euro after a dip, and we thought that'd be a pretty good little buy here. One of the reasons, even though the euro had finished the week off well, one of the things we discussed in the European crossover webinar was there had been that concern that once the Chinese markets opened up, there would be basically a dollar issue with them, and there might be a bit of a bid coming into the dollar, but I thought it would be temporary. So my thoughts were, if we do get a dip down here, boy, that's going to be a great area to go in and buy. So I think hopefully that, for those that are long, that goes and plays itself out, and we're eventually able to start to work ourselves higher. As I said, I certainly saw the dollar index go on the bid right from the get-go early on. We're kind of taking a pause here. But that's all we have for today. Blake, believe we'll be back tomorrow. Hopefully his internet issues have been resolved by then. But thanks for joining us here on the FX Daily Roundup with ForexAnalytix. And once again, you may want to go and consider taking advantage of our trial offer. It's 10 days for $1. You are able to go on and take advantage of all the analysis here with ForexAnalytix. And not only that, you have the ability to go on and view this, whether it be on your iPad or on your smartphone. And like I said, then you have the advantage also of the different analysis that we do provide from macro to basic technical to harmonics to Elliott wave, and then, of course, the chat room. So once again, thanks for joining us here on the FX Daily Roundup.